Farmer tells you it's going to rain, you grab your umbrella. In this video, I believe the world is overconfident, and I want to challenge that. In my 20 years of being a business owner and over a decade of being a millionaire, I want to give you insights from my industries to act as a canary in the mine so you can change your investment thesis, because invested money is going to be dead money next year. This video is going to tell you exactly why. Let's begin. Welcome back, friends. My name is Sean. I'm the world's foremost expert on a niche industry called short-term rentals and all of the disciplines therein, including investment and operational strategy, revenue management, etc. And what I would like to reveal to you as we walk through Spooky Canyon here by Lake Mead is that my industry has changed in a way that is reflective of the changes that many industries are going to face in 2026. Why my industry is valid for you as an investor is short-term rentals is a business of investors. If you've seen the news over the last 4 or 5 years, you've seen the dialogue of real estate investors getting into the space and real estate investors getting crushed after 2022. I'm going to explain this mechanism to you and the change that short-term rentals had to make in order to survive and why it is parallel to your investment strategy in 2026, especially if you are a small investor, because you are absent of market-leading AI and data. The best you can do is speculate. And out of respect, since this isn't some clickbait AI-driven script video, I'm going to kill some of the suspense for you so that way we can get into brass tacks, which is that passively invested money is going to get murdered in place of actively run businesses. And I'm not saying move your money into an actively managed ETF. I'm saying if you have a small to medium-sized amount of money, you need to get out of investments entirely. And there's going to be a good few reasons why. And number one is that you need to change. And starting a business instead of investing is the way that you will change. And to prove this, let me tell you how this went in the short-term rental space. Investors buy real estate property. Investors then hire professionals, which we call co-hosts. Much like as if you handed your money to an actively managed brokerage like a Merrill Lynch or something, and they claim that they're going to outperform the market because they've got smarty pants at the desk. But then the market changes. There's too much money in the space. Everything becomes a bubble and speculative, and then shit hits the fan. Pardon my French. In 2021 and 22, there was a cycle within our industry that was unnatural. We call it revenge travel. After COVID shut everything down, people wanted out. They wanted to travel, and they wanted to go rural places where there were trees and grass and animals. They wanted out of the cities. They wanted out of hotels. They wanted out of quarantine. This led Airbnb and other platforms to experience neck-breaking growth in 2021 and into the summer of 2022, giving investors a false sense of confidence in order to jump in and ride the trend, leading to lots of property purchases and property deployments into the short-term rental space. But very quickly, a year later, everything started to come down on their heads. And this is something that was named in the industry as the Airbnb bust. And you can look this up and see all the fear-mongering news articles about this. And much like the stock market, there's a saying in the brokerage world, which is that if the house makes money, good. If you as a broker make money, good. If the client loses money, well, 2 out of 3 ain't bad. And investors had no clue what was coming. They did not understand market dynamics, and largely co-hosts, they didn't understand this black swan event either. They are upsprout new property management companies trying to run into a new space. Short-term rentals is rather new as an investment thesis. And that is one of the key mistakes here, is that short-term rentals was not an investment. It's a business. It's hospitality. These companies are operating pieces of inventory that are masquerading as assets, real estate assets, to generate more cash flow in the business of hospitality. And when everything pulled back, no one understood why they were getting crushed. Now, if you were a real estate investor in this case, you would have gotten murdered. And the nature in which you would have gotten murdered is you were too far from your investment and you were unable to pivot because you're working through a team that also had a team. You're a few layers removed. The investor did not have the mindset nor the data to save his portfolio, and many people were forced to sell. Thankfully, in this case, there's been a real estate bubble as well. So a lot of these investors who sold in 2024 or ended 2023 sold their real estate at a profit. Good for them. And herein lies one of the key psychological differences between an investor and a business owner. As an investor, you might double down philosophically on your investment and say, this is the right idea, and I just need a diamond hands and hold my investment. But a business owner understands that it's a combination of deployed capital and mental acumen and adaptability that leads to profits. Business owners with any tenure and all know that industries change and market forces change. And not that the business becomes a bad business in 3 years, but that the market wants something else or they want it a different way. And the best businesses serves the market where the market is at regardless of their ego. And investors don't understand this. They're too removed from the business practices to understand that businesses need to adapt their product to customers as market forces push on industries. An investor wouldn't know that their company's not adapting appropriately in order to get out in time. Except for the big boys. Warren Buffett probably could see this coming a mile away, potentially. And you may disagree with my next statement because I'm not an investment professional. I'm a business owner. I'm great at what I do. I believe that we're in a bit of an everything bubble. Real estate's really expensive. The stock market's at all-time highs. Interest rates are rather high, aren't they? Crypto is highly speculative and volatile, and there's pump and dumps galore, rug pulls everywhere. It's an unsafe space. And so if there was ever a time for you to take your earnings from the crypto market or this all-time high in the stock market and get out and get into something else, I would argue that divesting a little bit of that money and starting a business to chase your dreams, to do what you've always wanted to do professionally, 2026 may be the perfect time for it. Because if we are in an everything bubble, then getting into cash isn't a bad idea. If the market pulls back, you're not going to be as invested. And the US dollar has lost 10% of its value over the last calendar. So in a way, moving into cash is like buying the dip. And to generate cash flow now with a business operation is more entrenched against manipulation of a market where your money is just on someone else's boat in the open ocean. And there's a couple other ideal market forces, or tailwinds, since we're using the boat analogy, that might help you start a business. And Cody Sanchez has talked about this for years, which is that business owner demographic is aging and they need out of their businesses so they can retire, but they don't want businesses to die. Sentiment, my friends. Sentiment is also why you hold your bags as stocks or crypto drops and next thing you know, your investment's worth $2. Sentiment. And if you're willing to make that mistake, imagine business owners and the mistakes that they're willing to make, which is to give you great terms on a business on their way out, just so that way the business will live, so the bags will survive. In the world of short-term rentals, this is extremely frequent. The reason why is short-term rentals is a business that's easy to get into. It's a very low barrier to entry. For example, you don't have to own a property to do short-term rentals. Hotels don't have to own their buildings either, by the way, so this isn't new information. You can go to a landlord, negotiate to rent one door, to rent a floor, to rent an entire building, and then to put that property into short-term rental space. This is like an arbitrage play in a way. You're taking a piece of real estate, you're renaturing it into a hospitality product, and then you operate it as a hospitality product at a multiple. The truth is, this is how I got my start. In 2014, I was a newspaper consultant. I was trying to save newspapers from going out of business by helping them reach younger audiences. Audience psychology, buyer behavior, that was my bag in 2014. And within that business, I leased multiple apartments, kind of like a corporate housing play, to recruit sales employees from coast to coast, to bring them into Houston. My understanding of salespeople is we want to free them from worry and distractions and let them run. Treat them like racehorses and just let them make commissions. So as the business, I covered every perceivable obstacle. They came into Houston. I gave them free rent in furnished apartments for a couple of months to let them get settled in. Now, I did make a mistake. I signed year-long leases, only having a 2-month plan for these doors. And when these sales guys moved out, either into their own places or different markets, those apartments sat empty. And I bled on those apartments for multiple months. That was a mistake of mine. A friend mentioned staying in an Airbnb in Austin. And this is when I was able to do my research and connect the dots and deploy these non-owned properties into the short-term rental space. I then built a business to over 150 doors and have made over $10 million in the space. I have then also become a coach in the space, and I'm also now the most known person in the space for short-term rental education, and my students have made billions of dollars in over 43 countries. Many of them do not own their properties, even though plenty do, and there's a third model called co-hosting, which we mentioned earlier, which is you take a landlord, convince them to do short-term rentals and to bear all of the risk of operations, all of the expenses on their own. Now let's bring it back to Warren Buffett and seeing the end before the end by knowing whether businesses are doing the right things by their shareholders. The way that the short-term rental market had to change because of oversupply was that these businesses had to stop being so cooperative in the space and they had to start competing against other short-term rental operators. That and hotels were clawing back their customer base after the shine of short-term rentals wore off. Hilton was doing an anti-Airbnb ad campaign, and people are now saying hotels are cheaper again, they're better run, they're more consistent, less problems. So Airbnb themselves has been in the middle of like an optics nightmare. And if you're an investor, having less customers and more competitors, you might go running for the hills, you might scramble. But what's great about this industry, if you're a business owner and you're in the mix, you realize that all the people failing they're still coloring in crayons. IQ level 85 at max. Many business owners in the space are doubling down now, because Airbnb's optics nightmare means that people are going to other channels. But investors don't want to move to other channels. They want their investment to be easy, and on principle, they don't want to have to make any changes. They want to sit on their investment. But every channel is a marketplace. And if there's an uptick of guests on VRBO or Whimstay or Booking.com, and the supply hasn't moved to meet them there, then the supply that is there will make a higher nightly rate and have more revenue at the end, because the supply and demand curves change per market, per distribution channel. And if you were a business owner with any practice or experience by now, you could see this and go, wow, I've got a unique opportunity here. You wouldn't be able to invest in Airbnb or Booking.com or VRBO and buy stock necessarily and get this massive uptick, but you could deploy cash into a property and be distributed into VRBO or Booking.com, and you could get all the cash flow upside. These micro movements year over year may only reflect a 2 or 3% stock increase for Expedia or Booking.com. But you as a business owner down in the trenches, this could lead to 30 or 40% revenue gains for you per property, which could lead to a 60 to 100% increase in your EBITDA. You could be printing for 3 months to 6 months before VRBO or Booking.com ever disclose this information to the public, saying, we think that we've increased our revenues for this reason, causing investors then to adapt. It's the people at the bottom that are closest to the move that get to see the move first. And this is why pump and dumps happen in the crypto market. People get in, promote it, pump it, and then you die. So my friends, let's recap some of the claims here in this video. We're in a bit of an everything bubble, which means investments are already risky already. The dollar's down 10% over the last year, which means the dollar has seen some negative pressure, which means getting into cash soon might not be a bad idea. Third, you starting a business would be great practice for you to develop skills and a mindset shift that will make you better with your money and better with your investments in the future. You'll start to ask better questions because you know how business works, and you'll know if your investments are in the hands of a company that's not going to shepherd your cash correctly over the long term. Fourth, you as a small investor, you're so far from the pulse of the investment space that you're the target. These bigger companies are using softwares to conduct trades that you don't even know exist. Between them, market makers, brokers, the slippage that occurs when you try to change your trades, the only way that you can really make money as a little guy is to get into the right stocks, hold on for dear life, and then exit years down the road. Or you could have just copied Nancy Pelosi trade for trade. But now that she's going to be investigated, I don't think that there's going to be a Nancy Pelosi to follow very soon. And again, in the bubble of everything, being a bull may not be such a safe idea. We've been in a bull run for a while, and I don't want to tell you to be a bear. I don't think you should be one or the other full time. But again, I'm not an investment professional, but I do know winning day traders. And let me kind of close on that. A day trader is not an investor. A day trader runs the business of making trades based on market movements that they've identified that have a positive expected value. They'll trade up, they'll trade down. It's their job to be an expert in the area that they know. And many of the day traders that I know that are very good focus on like one stock. And then they focus on a few different types of setups. And they do not put their cash in unless a certain stock has a certain setup when the market is moving a certain way. Most of the best day traders in the world keep their cash out of the market over 90% of the time. That's not investing, is it? We really haven't talked about investing in real estate as your deviation either, which we've used real estate so much as an example in this video. Real estate is also in a bit of an everything bubble right now too. And because of interest rates with mortgages, the real estate professionals that I know are having a hard time justifying selling a property as an investment to an investor. The 20% down and the high interest rates, it's too much cash up front for too little cash flow on the back end. If you're a landlord, the rent that a tenant pays has to cover your nut. And your mortgage will be too high for the rent to be able to do so. In California, this has always been the case. There's very few cash flowing properties in California. But now even in Texas, of all places, it's hard to find a property that will be cash flow positive as a rental property. So really, the only way to own a property that cash flows is to put it into the short-term rental space. But if we go back to the beginning of this video, if you hired a co-host to run your business for you, that person is going to take 20 to 25% of your top of line. They're going to run it their way. They're not going to disclose to you market forces that affect your investment because they know nothing about market forces. They're just a property manager trying to masquerade as a hospitality business. Real estate agents and prop managers were the closest to landlords when Airbnb became popular, and thus they had the trust with landlords and got their chance to run a hospitality business. But none of these professionals have went to school for hotel and restaurant management. None of them. None of them know the math of revenue management. None of them understand game theory and how to deviate a product against a market to make sure that they stand out, that their marketing signals the right attributes that makes a customer want to choose their listing versus the neighbors. A property manager just knows how to file an eviction, collect a rent check, and ask a handyman to fix a faucet. They're not that intelligent. And if you're a property manager, sorry, I said what I said. Now, my friends, this video is not to tell you what to do, but just to challenge what you think you know. Because as a business owner for 20 years, seeing the world as I see it, I see the world this way. And I may be completely wrong, but I'm not terrible in my choices because I have come a long way as a professional so far. If you have questions or you want to argue with my thesis, I'll be in the comments to talk to you about it. And if I was going to be shamelessly biased in my final statements, be it that I am a YouTuber and an Airbnb coach, I do see tons of opportunity in my space. Like I said, people aren't pivoting on principle because they want this to be as easy as it was 5 years ago. They're not willing to do the new work to stay profitable. And if you want to understand that on a deeper level, because maybe short-term rentals is of interest to you, watch this video next. Thanks so much again for supporting this channel by watching this video. And as always, my friends, I'll see you on the other side.